So enterprise stocks had a phenomenal 2020 coming out of the March 2020 bottoms. They all rallied strong. They well outperformed the S&P 500, and investors that held onto these stocks did quite well last year. But then earlier this year, we saw a high growth stock crash, correction where a lot of these enterprise stocks got bundled into. They saw significant pullbacks, and it took quite a while for them to start picking up steam once again. A lot of them were down double digits from their highs, and they were just consolidating for the last few months. But that's all changed with this last earnings season that we just went through. A lot of these enterprise stocks have shown us that, our stock prices are high, but we're justifying it with incredible earnings, and investors are starting to reward these companies once again. So in my opinion, I think that these stocks are back in favor, and the bull market for these enterprise stocks is back on. And if you're a bit unsure, you're not really convinced, take a look at this. In the last 1 month, Datadog is up over 23% after it reported record earnings. Workday, another massive name here in the enterprise space, is up over 15% again after reporting strong earnings. Palo Alto Network, a strong security player for enterprise, is up 16% again on the back of extremely strong earnings. And this has also helped CrowdStrike indirectly rally over 13% in the last month, but they are scheduled to report their earnings today itself after the bell, so we'll see if that one goes higher. And I can go on and on with a lot of stocks that have reported phenomenal earnings, and for the most part, I'd say like 80-90% plus of these enterprise stocks reported strong numbers and moved higher. And there's a small, chunk of them that actually reported strong numbers, but saw their stocks move lower for whatever reason. But still, in my opinion, the trend is clear. The majority of these companies are moving higher. So the question is, we're looking at hindsight data here. So has the ship sailed? I don't think so. I don't think it's too late to invest in a lot of these stocks because, yes, they've moved up here after earnings. But if you really look at a long-term outlook on some of these businesses, they're still very early on for what they plan to do over the next, say, decade or so. For example, Splunk is a name that I own, and we can see from a technical perspective, we have reversed the downtrend here and broke past the strong resistance that the $150 mark held. So we may start making a run now for all-time highs over the coming months. Salesforce, another name that I own. I'm very, very bullish on this company, and this one is trying to push new all-time highs right now, and I have no doubt that this will happen sooner or later. So by now, I hope you're convinced that, these companies are doing really well. Their fundamentals are extremely strong, pushing record levels. And, while they may be pushing their all-time highs, remember, high can still go higher. These companies can still do much, much better over time. So don't base your decision on, the stock's at all-time highs, I don't think I'm going to buy this one. Look at the fundamentals of each of these businesses that you're interested in, and then make a decision on, hey, it's producing this much revenue with this much profit and growing this fast. Does it make sense to have this sort of valuation? Yes or no? Yeah, it looks good. That'll be a buy then. But anyways, in our new world of, tech first, remote work from home, the need for really connectivity wherever we are, and with businesses having to enable their employees to work from wherever they want, I think these companies will have a great remainder of 2021 and probably a good 2022 as well. But anyways, let me just quickly talk about 3 stocks here that we don't really discuss too much on the channel that may be worth looking at. They all report their earnings this week, and there may be some good upside here with these stocks. So PagerDuty is the first one that I want to discuss. They report their earnings this week, like I said, and this one looks from a technical perspective like it's ready to explode higher. They provide a tool that helps consumers tackle emergency issues that come up, and with everyone work from home now, a tool like this is critical to ensure that things are running smoothly like expected. Analysts this quarter are expecting some pretty bad numbers from PagerDuty, so if they're able to surprise us here a bit to the upside, we may see this name up double digits by the end of the week. And also, last I checked, this name had like 11% short interest, something like that. So there's definitely a potential here for a short squeeze as well if they report strong numbers. Okta is another name to look at, reporting again this week. And again, it's a must-have for organizations during this work-from-home era. They provide a tool to allow users to authenticate their devices with things like SSO, single sign-on, which enables a secure connection for devices. Security is top of mind these days, and companies like Okta should see direct benefit from this. And if Palo Alto's earnings told us anything, it's that enterprises are willing to spend on security. Okta is slated to report a big loss this quarter, but if their recent quarters are any indication of what we could see, they should beat analyst expectations quite nicely here, which again could result in a nice rally for this stock. Now overall, the stock has been fairly strong in an upward trend here for the most part, but remember what I said, guys, high can still go higher. Nutanix is the third stock here I want to quickly discuss, and definitely one you should consider because it's a company, again, focused on enterprise cloud. Their goal is to have one platform, the Nutanix multi-cloud platform, to pretty much run everything in your organization on. They also help companies integrate their private cloud and public cloud, which can be a messy solution sometimes, so they try to simplify it here. So this is definitely another interesting company, front and center in this new world that we're living in, and definitely something that offers value to enterprises. Now, analysts are expecting a decline in earnings this quarter. However, this company does tend to surprise us every single quarter, so we may see something positive again in this upcoming earnings report. This stock has been beaten down more than most recently, cleared its moving averages, which is a good sign, and this could mean that it's poised now for a monster move back up to all-time highs in coming months. So guys, these are just 3 names to consider. I'm not gonna say go out and buy these stocks today. Understand them better, spend some time to do due diligence, don't blindly invest in stocks that YouTubers like myself talk about here, because sometimes there are things that we don't necessarily see or things that we don't necessarily understand that well, and at the end of the day, if the investment doesn't work out, you can't really blame anyone else but yourself. So if any of these companies interest you, go to their investor relations page, read their 10Q, 10K reports, read their annual reports, read anything that you can, watch some interviews, and do proper due diligence before you put a single penny into these stocks. There may be a lot of upside here for these. You may be able to produce multi-bagger returns on some of these names, like PagerDuty, for example. But all I can say is do not invest in these until you understand the companies. But anyways, I still stand by the belief that these enterprise stocks are poised to run higher. I am placing big bets here with stocks like Splunk and Salesforce with my own money because I believe that their services are going to be much more important in the future than they are today. They're going to keep growing faster than they are today, and there's still a lot more upside to realize for these businesses. Anyways, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.